Well, currency and trade issues take center stage in Korea as investors focus on how the currency clash will play out. Talking about that now is Michael Rourke. He's the chief market strategist at BTIG, joining us on the phone today. And, you know, Mike, I heard that you just got back, literally got back from Asia, from Australia, Singapore, Hong Kong. You took a tour with your clients. First off, what are they telling you? What are they asking you about what's going on?
Well, I mean, this theme about, the debasing of the U.S. dollar is a big theme out there. So you're seeing, in places like Hong Kong and Singapore where the currencies are pegged, people are, rotating into risk assets because of quantitative easing. And then in a place where Australia, where the currency isn't pegged, they're concerned about the rapid pace at which the dollar is lost ground to the Australian dollar.
And are you reassuring? I mean, what are you saying to, what is your response?
Well, and it's tough because, generally here in the U.S., we'll look at the dollar versus, the euro and obviously the Chinese RMB, because those are big economies and that's who we're dealing with.
Right.
Whereas, so they're telling, in Australia, they're telling me about dollar weakness, and I say it's more Aussie dollar strength. But obviously, it's the same thing. I think the problem is, you have these competing policies coming out of the U.S. government. Mm-hmm. The Treasury, obviously, Secretary Geithner sending this letter to the G20 ministers, saying that you don't want to have this currency debasement. But when everyone thinks the Fed is about to print a bunch of money, and there's really the Fed hasn't done much to provide clarity as to how much QE they're going to do.
Right.
You're really sending a poor message as a nation, because it looks like you're sending contradictory policies.
You are. But you are, because you're basically saying that the Fed is going to print more money, but then at the same time, Geithner's saying, but we're going to look after our budget.
No, and we are sending contradictory, policy messages. And I personally, I study the Fed all the time. I don't think they're printing money. I don't think it's going to play out like a money print.
Why?
But they've left this out there in the open where, they haven't given any type of real guidance as to what they plan to do, mm-hmm. and they've let a lot of speculation take hold in the past 6 weeks or so. And and then you have Secretary Geithner saying, we don't want to have currency devaluations, but wherever else you go in the world, they view it as the U.S. as being the primary, nation looking to debase their currency.
The irony here, of course, is that the trade has been, as the dollar goes down, everything else goes up. Mm-hmm. And we're going to actually get into that in just a little bit. So, I mean, the irony here is that you might actually be rooting for the dollar to go lower, right, because everything else goes higher. Well,
the thing is though, and Mike, right before you, we had Scott Davis. Right, that's a great point, Adam, because right before we had Scott Davis on from, the UPS CEO, who was saying, on the one hand, he knows that the government does, they have a strong, quote-unquote, strong dollar policy, but for his business, he wants the dollar to continue to go lower.
I have a great story regarding that. I drink a lot of Pepsi, and in Australia, I paid $3.
Are you sure that's all you drink, Mike? Come on, you can.
No, I paid $3.80 for a Pepsi that cost me $2 here. So it's good to be a multinational in this type of situation, but the fact of the matter is, you have to communicate your message to these other nations. Like I said, I spend a lot of my day following the Fed and dissecting their policies, so I don't think it's a print. But I don't think the Fed's done a good job of communicating that to the rest of the world.
But you don't think it's a print, then what do you think it's going to be?
Well, no, they're going to do quantitative easing, but when you look at the first round of quantitative easing, with $1.7 trillion in assets they bought, $1 trillion in reserves still sits at the Fed's balance sheet, and money supply growth in the United States hasn't been that strong. So I don't think it's a print. It obviously could set up to be a debasement in the future if inflation ticks up and things like that. But like I said, the Fed has instead chose to say, we're going to do this. They haven't provided any guidance or parameters, so you can't blame these people around the world for being defensive